A Wednesday may not have been the greatest day for the stock market, but there were a number of companies that actually hit 52-week or all-time highs. Does that bode well for stocks down the road? Welcome to Trading Nation. I'm Brian Sullivan. Erin Gibbs of S&P Global, Matt Maley of Miller Tabak are your guests. And Matt, this is the kind of stats that are right up your alley. You send out these notes every day, which are great, and you're always highlighting this kind of stuff. Do you think that, though, a number of new highs on kind of a blasé market day means something?
Well, it certainly doesn't hurt when you get the underlying market acting a little bit better. And even when we were in the decline of the last 2 days and at the low yesterday in the market, the breadth wasn't very bad at all. It was barely negative, and by midday, the Russell 2000 was actually in positive territory. So that all bodes well. I mean, the one thing I am a little concerned about, though, is that with the earnings, as good as they're starting to really turn around. During the earnings recession of the, that we went 5 quarters of an earnings recession, the stock market didn't go down. It stayed flat. Usually it goes down during an earnings recession. So the upside may not be quite as much now that earnings are turning around as they have been in the past and other times when we've come out of an earnings trough. So although it does bode well, I don't know the upside is going to be huge as we move through the year.
Okay, so, well, he said the E word, Erin. He said earnings.
Yeah.
So when we think about earnings, we think about Erin, because this is what you do. You live and breathe corporate earnings. How do you see the market playing out given some of the highs that we mentioned, the earnings that we mentioned, and everything else?
Especially during earnings season, and like you said, we're coming out of a 5-year trough. We haven't seen expected double-digit growth in over 5 years. So there are a lot of things going for the equity markets in general, particularly the U.S. equity markets. So one, the U.S. still looks better than Europe and China because of uncertainty around there. The U.S. dollar is strong. That makes U.S. equity markets look better. And then we've got these good earnings coming in. And then also, obviously, the political environment, and in theory, should be more pro-growth. So I think there could be a lot of stocks that make new highs. And we've been seeing that as we go through earnings season. Companies are raising estimates as expected for Q4. But more importantly, they're holding their 2017 estimates. We haven't seen as much of a downtick as we typically see. And so, yeah, we could keep seeing more new highs as we ultimately are making more money.
Quickly, so far, you're happy with the earnings you've seen? Happy with the earnings and guidance?
Not
Not great,
earnings,
but good, okay?
Yeah, we're still at about 12% for 2017, which is good. Double-digit growth is good.
All right, Erin and Matt, looking at new highs, looking at earnings. Thank you both very much. Folks, thank you for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.